announced a 2 rupee price cut in fuel prices on Thursday. Most brokerages, including the likes of Morgan Stanley and Citi, said that HPCL could see some near-term impact due to the price cut. To discuss the implications, business in general and more, my colleague Sonal Bhutra spoke to the company's marketing director Amit Garg and began by asking him about the impact these fuel price cuts will have on the company's margins. Listen in.
Yes, the market was anticipating some cuts for quite some time. And we were reading that in the newspapers because, crude prices and the way the pricing of the petroleum products is done, it's a very complex process. It's not a direct correlation with what you read in the newspapers the day before and there's a happening the day after. So we were contemplating because there were times due to volatility when we could not really cut down the prices and we really wanted to pass on some benefits to the customers. So the time was right and we thought that, this is not going to make a lot of impact on our margins at this point in time. So we took a call and we reduced the prices. And I think talking of the market, they had kind of taken it in their stride because they knew that something was coming. So market was ready for this kind. Actually, what I hear from my friends that they were expecting a bigger cut. Yes. So I think this was much lesser, which was the right thing to do on our part. And I think today the market has bounced back. So all is good. So yeah.
Okay, interesting. So after elections, crude prices would define how prices would be going forward for fuel?
Yeah, we take our own calls and, our companies, we do not operate on a daily basis. We go on a quarterly and a yearly basis and we see you have to also understand and your viewers have to understand the companies are going through a phase of transition and we need to invest a lot of money into the future energy, the new energy, the green energy as we call it. So we have to take very calibrated calls. When to keep the RSPs on similar lines, when to make a small cut or when to increase. So there's nothing to be linked with the elections per se. We would take our own calls when the right time comes. And it could be both ways. I will not say of a cut or an increase. It would depend on how the market and the crude behaves at that point in time. And with so many other factors, you know it all. It's about the Forex, it's about the OPEC cuts and the announcements in the Middle East and the Gulf. So all those things do make an impact. So we should be ready for both sides as and when it comes. But yes, the companies do take a very calibrated call on this.
That's very interesting. And while we are talking about fuel price cuts, what also happened last year was strong performance by the company. 9 months have been good in terms of marketing margins. You have averaged at around 4 rupees per litre if we compare both petrol and diesel together. Is Q4 going to be as strong as Q3? What is the outlook in terms of volumes as well? And you've given a target of around 44 million metric tons in terms of sales volumes. Do you think you will do better than that?
Yeah, we are keeping our fingers crossed and the teams are working day and night. Last 3 quarters have been fantastic and even April and this particular quarter with Jan and Feb, the volumes have been super fantastic. So we are growing much higher than our peers during this period and we hope to continue to do the same. On margin fronts, I would not really commit anything because that's something which we don't talk outside. But yes, they look good and we are looking for a great year.
Okay, great year. You spoke about market leadership when it comes to marketing segment, and HPCL has the highest exposure amongst all the other oil marketing companies as well. Are you seeing market leadership across most of the fuels, be it MS, be it diesel? Are you market leader there in terms of market shares?
Well, market leadership has many components. So for the year which has gone by in terms of the calendar year, we have been able to maintain our growth leadership, which is something the key for all of us in HPCL. Because numbers will automatically come once you are growing the fastest in the industry and more so amongst the peers. And even as we talk now, so we have grown by more than 1% more than our peers, the nearest competitor, which is very satisfying, which talks of the trust the customers have reposed in us and they have really taken our offerings in the right stride.
So what next in terms of, you spoke about there is a transition that's going on. How much of your Capex going forward will be towards, say, renewables, green energy, and in terms of split, refining, marketing versus renewables, how will the portfolio change?
So refinery, as we know, we are almost there and our VRMP project at Vizag is almost over and the HRL is something which will happen in a few quarters from now. So I will not talk about the refining part, but overall on a marketing basis, if I say as a company basis, next 5 years, we are kind of split between the core and the new energy. We're just having some discussions and almost like almost 50%, 48% or so, the new expenditure is going to be on the new energy, which is very, very critical because you always question me about transition. And I think a couple of years back when we spoke, you said that you need to allocate more budgets. And as I talk to you today, I think almost 50% of our budgets we are now putting in the new energy space.
Okay, interesting. And what about the lubricants business, the demerger that had happened? What is the update there? By when do you expect the approval? Any strategic partner that you were looking for? Anything that has happened there? Because the street is very bullish on that part.
And so are we, let me tell you, because our lubricant has been the darling of the market in terms of the customer demand, and it has been occupying #1 position in many markets and in many segments. And we saw that there's a huge upside available. If we look at the peers across the globe, we found that there's an upside available, and we really need to unlock that value. So we have already engaged a consultant, a world-class team is there sitting with us right now. We have assigned a couple of people to this activity, and we are not waiting for some big news to emerge, which will of course do in some time. As we go by on our assessment of as is, where is basis, we have taken a couple of steps to unlock that value even now. So we are not waiting for 1 year. I mean, quarter by quarter, we are going to take steps, whether it be in terms of inventories, in terms of the packaging, in terms of the blends that we are working on. And I think people should be ready for some big surprises along the way.
Okay, they've been surprised last year as well, so more in the offing is what you're saying. So when you said 50% of the Capex is going into new energy, can you give us a sense of what that amount is generally that you are willing to spend, say, next 3 to 4 years? And how much of it will go in the green hydrogen plant? When is that coming on stream?
See, I'll tell you, this has some components. You would be aware that we recently had a wholly owned subsidiary, New Energy, HPCL, Renewable Green
Correct.
Energy Company, which came into being. And it was one of the fastest move, I think, which has happened in this space. Normally, these companies take much more time to come into being. And already we have commissioned a plant under this new company. And now we are selling our power to a customer already. So that's, I would say, within a span of less than 60 days, I mean, we have been able to do it. So we are almost working on a gigawatt of solar power, which should be happening as we go by in the next year. We are working on wind energy. We are working on hybrid. And regarding hydrogen, I mean, that is something that we are going to start with the refineries. And Vizag, as you know, is the first refinery in the country which will have that plant up and about maybe in the next couple of days. I'll keep my fingers crossed on that. But yes, it should be coming. And hydrogen is something which will happen along the way. I mean, the government mandates are going to be there. But even otherwise, as the prices come down for a kg of hydrogen, I think it will have more traction.
Yes, that's the next thing everyone's watching out for, cutting off costs for hydrogen. Last question before I let you go. What about the electric charging infrastructure? We were having a conversation early in the morning today that not much has happened here. What are HPCL's plans here?
Well, I mean, we have one of the largest infrastructure in place. We have tied up with some world-class companies to put the new infrastructure in place as we go by. We have many models which are working. And we are also utilizing the FAME subsidy in a very big way. And by the end of next year, we should have 5,000 outlets catering to the needs of the EV customers. Even today, as we talk on our Mumbai-Pune Expressway, I mean, you see many vehicles getting their charging done, and it's a sight to behold and rejoice. So yes, it's happening in a big way. And even before the customer realizes, we are going to be there all across.
Okay, interesting conversation there, but moving on now.